Hi everybody, Mike Santamore here. In this video, I am going to explain to you where is a good place to place your stop loss whenever you make a trade. Now, this usually works for any chart, so regardless of what you're trading, it could be crypto, it could be commodities or Forex or stocks, it just doesn't matter. It usually works. So it's not going to work for everybody. Some people may disagree with this. I mean, I believe it will work for you if you give it a real try, but some people may disagree with this, so keep that in mind. Everybody has their own strategies. However, it works very well for me, so I think it will work well for you as well. So basically what we got here is we had a wedge here that broke up. So you would get in on the buy right here, and all is good. Now, for your stop loss when you make this trade, you have a few options here. It's usually the previous dip or the previous low, and hopefully that's on the trend line. So looking here, if we got in on the break on here, I mean, this is a pretty big move, so I think this would have been a good spot to put your stop loss just below the last low. So if price came down here and came down here, I mean, you shouldn't stay in. You should just get it back in on the break anyways. So that would be a good stop loss area. But for some longer term people, maybe this one would be better, or even this one, or even possibly this one. I mean, I don't see any point in staying this low like this whole time as it just goes down and you watch your profits or your red account go even more red. So I think this is the best spot here for this situation. Now, as it broke up, we had here, you could have took profit here as it broke down. So basically what you would have done, and this doesn't always work because it's closely related, so you would have seen this line here, and on this term you would know that once you're in the trade, that if this broke down, you're probably going to want to get out. But you can't watch it forever, and the very likelihood is this is going to happen when you're not looking. So what you would do is you would raise your stop loss to the last lows, So if we take this here, your stop loss would end up here, and then when it did that, it would be here, and then here, and then here, and you would be out, and you would take your profit right there, which is definitely maximizing the amount of profit you can get out of that. Now, because it's a bullish trend, we're definitely not going to go in on the down. We're going to wait for this to break because that's how it works. You have a resistance immediately, usually. So we're going to say maybe on the shorter term, it's probably going to be something of the sort. It's hard to say for this one. I mean, there's only two bounces here, but it might have been more on the shorter term. So we'll call it this. Let's say it broke and you get in on the up here. So your stop loss is going to be right just below this last previous low. So the previous low is where it's going to be. So when it came down here, you were nowhere near to getting stopped out. Now, as it shot up, that's your new low. That's where you put your stop loss. Then there, that's where you put your stop loss, and that's where you would have gotten out. And not the most impressive one. You're not always going to let your stop loss get you out. See, if we see a line like this, this is a take profit line, okay? So as it came up here, you could take profit here and get out. You could take profit here and get out. On the shorter term, even shorter, maybe half hour to an hour, you're going to see lines here, and you're going to get in on those. And when you do that, same concept applies. The last valley is your stop loss. Notice how it never goes back there, and when it does, it's the time to get out. Okay, so then when you can do it on the shorter term, it's nice to be able to get these moves on the shorter term here and here, because we know it's a bullish trend. If we get caught, it's still a bullish trend. We're okay for a while, right? So we could hold, and it will come back up most likely. Now, again, another break. It breaks up. That's our stop loss right there. As it shot up here, we could probably put it up here. As it zigzagged here and shot up higher, we could probably put it up here. And as it messed around here, we could probably have put it somewhere around here. On the shorter term, there'll be dips, and you can focus on that. So if you look on the shorter term, you can go off of dips like these, okay? Not always. You don't always want to do that because you want the main dips. You don't want these little tiny dips here, or you'll get shot out right around here, right? So you want the big dips, not these little dips. These dips is what you want, if you can do it, if you have the funds to do it. So moving forward again, as it broke out here, and then came and made a new low on whatever we would have gotten out. Then it comes down again, and here we are again, another buy right here, and there's our stop loss right there, and it never came close. Then our stop loss got moved there, and as this shoots up now, even right now, I would put my stop loss just below here or even higher. Now at this point for this one, we could probably even put it up past this break, because if it comes down past the break, then it's a false break, right? So, but I don't know, you know, in the ultimate reality of it, the true place your stop loss should be is below this line right here. So if you even have the funds to do that, then you can follow it through. And if you look, these lows, that trend line, just a little lower, it's, you know, it's the spot, right? That's the spot. So like this stop loss here might be too high. However, it's okay at this point. You would have made a lot of money if you get stopped out too short. You could just get back in on the next break up. And that's how I would play this. Even now, this looks like it, you know, it's a little different because we have a new break there, but you have to watch because we have that there. So chances are it's going to come back down here and zigzag in this channel. So you could always just have your stop loss even lower below this channel. So for the most part, it's those lows and highs, and at other times it could be the supports and resistances just below them if you're able to handle that. Usually that's a little further away, and it would be a big loss if you did that. Like right now, if you had a buy right here and your stop loss was all the way down here, that could be devastating even with small lots. So, you know, we want to play it as conservative as possible. I think this one is good. I think if it comes down there, no point in staying in. Wait for the break and get out. Even right here, this could be an easy take profit point. It's just you have to see what happens. The week is about to start, so that's the end of the candle from last week. So we need to see if it's going to just continue up or continue in this channel or zigzag around. Anyhow, so that's how you set your stop loss in that aspect. Now going down, it's the same situation. So you have your, we'll say you have your buy here, then your stop loss would be up here. And as it came here, maybe as you're seeing it still doing that, like it never made a dip yet. It just kept going straight down. So you could trail your stop loss with these if you like. And they seem to work. And no, you would still be in because you keep it a little higher than the last previous peak or valley. So you keep going, you keep going, you keep going, you keep going, and then, oh yeah, you would have got knocked out over here. Perfect spot to get knocked out at, I would think. I mean, that's a great move. Then when that does that, you could get in on the next breakdown. Boom, on the breakdown, there's your stop loss there, there's your stop loss there, and get knocked out right there probably, or probably down here on the shorter term. This is the daily chart, so definitely going to have on the shorter term, you're going to have lots of dips like this. So you don't want to go too short because you got to make sure you get the right dips. Like you want, you know, like this one you can see went down, but the trend didn't change, right? So you want to make sure your dips are proper. I mean, it's okay if you had have got out here, I think. And then as it dipped down and came back up, you just get back in on the up. But it's hard to say. When it's happening live, it's not so easy just to get back in because it's a roller coaster ride as it is. Anyhow, I hope this explains everything. You know, I usually work off the 4-hour chart here. So that's definitely how you want to base your stop losses. The no less than the 4-hour chart. 1 hour is, like I said, you can see lots of different ones that can fool you. So do the 4-hour. Anyhow, I hope this was helpful. Please like, subscribe, and share this video if you found it helpful. I'm sure others would as well. And have a great day.